Investec is a diversified financial group. It's primarily active in investment banking, private banking, and asset management.
Right, so I think we know the personalities here. Stephen Koseff is the CEO. It was established back in the 1970s. It's built a very big business in London, and it has its South African footprint. So if you put those two together, you have a group which is doing well, but is exposed to this shift in sentiment with regard to the UK.
To the United Kingdom. We've got a market cap here of 83.8 billion rand. It trades on a PE of 11.2 and a dividend yield of 5.4%. Lance, do you hold Investec?
I don't. They've grown very successfully over the years, but very much by acquisition. And it's tended to be quite an expensive way to grow because you pay up for these acquisitions. Some are not what you expected. You have to integrate them. And the return on capital has been maybe not as good as it could have been because of that, because of that premium, that goodwill that you're paying away all the time. And you've seen recently they've had to sell a lot of the investments that they made, especially in the mortgage trading space. Those businesses have been very hard hit from the previous financial crisis. Quite exposed to Brexit as a result of London, because the big question I think on everyone's lips is whether London will retain its status as an international financial centre. And you can't answer that.
Do you believe it's at risk of losing that status?
Yes, very much so.
It is the fourth largest economy in the world at the moment.
Yeah. So, and this has a market effect because the trade between Europe and London is significant, and the services and the financial flows that go through. And look, all the negotiations are going to start taking place now. And what they agree on or can't agree on will determine that. But the risk is certainly there. You have to say it's uncertain, and there'll be a big question mark. So that
risk is very pertinent in this conversation, as we've pointed out, with Investec's exposure to the UK.
Yeah. Look, I like the management team here, though. They've done a tremendous job, and in the asset management environment, the combination of Hendrik du Toit's institutional asset management business and then all the private client businesses has built a formidable operator. It's not so sensible or sensitive to investment banking fees as it used to. So I think you do have to give them credit. I think it's too cheap. Having said that, they are now the victim sentiment-wise anyway. You can see the share price was at 110, 111, 112, but it's fallen sharply since that.
Does that mean there's a buying opportunity? Because this is really contagion, and we're talking about Investec being affected by a broader market movement.
But unfortunately now, at least we have a new Prime Minister in the UK, and we have new cabinet appointments, David Davis, Boris Johnson, Philip Hammond replacing George Osborne, the Chancellor of the Exchequer, which is their name for the financial director. But I think the continuity is all very well, but the uncertainty remains. So
do we call this one
it's coming out of the EU.
So as a result of that uncertainty, I think it's going to stay cheap for a little bit longer, so not hot on that basis.
Even on the cheap element?
It's going to stay cheap, so that you have this risk discount that will linger on.
There's no hurry to get into it.
That's
all right, so not hot. And do you echo those sentiments?
I echo that, because Davis, who's the guy whose job it is to negotiate the exit from the EU, has already said that he doesn't want to trigger Article 50 anytime soon. That means this thing's going to hang around. There's going to be uncertainty about economic growth. And remember, you can't, for example, have a high PE on an asset management business that's doing wealth administration if the GDP of the country is expected to contract.
Hot or not?
I'm afraid not hot.